What if one of the world's biggest debt stories quietly sitting in Japan could slowly change how strong the US dollar really is? In today's video, we are looking at Japan's massive debt situation and why some analysts believe it may influence global money flows, including the US dollar. We will break it down step by step, in simple terms, so you can understand what is happening, why it matters, and what to watch next. Let's start with something simple. Imagine two giant ships in the ocean. One ship is the United States economy, carrying the US dollar. The other is Japan, carrying one of the largest debt loads in the world. Now, these ships are not isolated. They are connected by trade, investment, and global finance. So when one moves, the other can feel it. Why Japan's debt matters. Japan has a very high level of government debt. It is one of the highest in the world compared to its economy size. Now, debt itself is not always a problem. Many countries have debt. But what matters is how that debt is managed. Japan has kept interest rates very low for many years. This helped its economy stay stable. But it also created a long-term situation where debt keeps growing. Think of it like using a credit card for daily life, but only paying the minimum amount for years. At first, it feels fine. But over time, the balance becomes very large. The quiet connection to the US dollar. Now here is where it becomes interesting. Japan is one of the biggest holders of foreign assets, including US government bonds. That means Japan is deeply connected to the US financial system. When Japan adjusts its financial strategy, it can affect global bond markets. And bond markets are closely linked to currency strength. This is where the US dollar comes in. If global investors start shifting money because of changes in Japan, it can create pressure in currency markets. Not a sudden collapse, but slow movement, like water shifting under a large boat. Interest rates, the key factor. Let's talk about interest rates. Interest rates are like the price of money. In Japan, rates have been extremely low for a long time. In other parts of the world, especially the United States, rates have been higher. This difference creates global money flows. Investors often move money to where returns are better. So when Japan changes its rate policy even slightly, global investors notice. It can affect where money goes. And when large amounts of money move, currencies can react. A simple example. Let's make it easy. Imagine you have two banks. Bank A gives you 1% interest. Bank B gives you 5% interest. Where would you put your money? Most people choose Bank B. Now scale that idea to trillions of dollars. That is how global finance works. Small changes in rates can shift huge amounts of money, and Japan's situation plays into that system. Why people watch Japan closely? Japan is not just another country in this story. It is a major player in global debt markets. When Japan's financial policy changes, it can affect global bond prices, investor confidence, currency flows. This is why economists and traders watch Japan carefully, because even small signals can ripple outward. Where the US dollar fits in. The US dollar is still the world's main reserve currency. That means many global trades and savings are held in dollars. But currencies do not stay strong or weak forever. They move based on trust, demand, and global capital flow. If investors shift large funds between regions, the dollar can feel that movement. Not because it is collapsing, but because global money is always adjusting. A slow-moving system. Here is something important to understand. None of this happens overnight. We are not talking about sudden shocks. We are talking about slow financial pressure. Think of it like ocean tides. You don't see them move every second. But over time, the shoreline changes. Japan's debt situation is part of that slow-moving global tide. The role of global confidence. Markets are not only numbers, they are also confidence. If investors feel stable, money flows normally. If they feel uncertainty, they move money carefully. Japan's debt level and policy choices can sometimes influence that confidence. And confidence affects currencies like the US dollar. Not directly, but through global behavior. What could happen next? There are a few possible paths. 1. Japan continues its current approach with small adjustments. In this case, global impact may stay limited. 2. Japan slowly changes its interest rate strategy. This could shift global investment patterns over time. 3. Global economic conditions force bigger changes everywhere. This would increase volatility in currencies, including the dollar. None of these paths are guaranteed. They are possibilities, and that is why analysts keep watching. Why this matters to you? You might be thinking, why should I care about Japan's debt? Here is the simple answer. Because global finance is connected. Even if you never trade currencies or buy bonds, these shifts can affect prices of imported goods, strength of your local currency, global inflation trends, investment flows in markets. You don't need to be an expert, but understanding the direction helps you stay aware. A real-world picture. Think about your local market. If the price of fuel changes, transport costs change. If transport costs change, food prices can shift. Now imagine that on a global scale. That is how interconnected economies are today. Japan and the United States are both part of that system. A calm reality check. It is important to stay balanced here. This is not about panic. It is about understanding structure. Japan's debt is large, yes. The US dollar is powerful, yes. But global systems are designed with many moving parts. One part does not decide everything alone. Instead, they interact, slowly, continuously. What experts are watching? Economists often watch a few key signals. Interest rate changes in Japan. US bond yields global inflation trends, currency demand shifts. These signals help them understand where money may move next. Again, not exact predictions, just patterns. If this topic is new to you, take a moment, because this is one of those hidden systems that shapes global life. It is not loud like news headlines, but it is powerful in the background. Another simple way to see it. Think of global money like a river system. Japan is one river. The US dollar system is another. They do not flow separately. They connect through underground channels. When one changes speed, the other can feel it. Final thought. Japan's debt story is not just about numbers. It is about relationships between economies. And the US dollar is part of that relationship network. So when you hear headlines about debt or currency pressure, remember this. It is usually not one event. It is a chain of many small shifts. So what should you take away from this? Japan's debt situation is large and important. It connects deeply with global financial markets. And through those connections, it can sometimes influence the direction of currencies like the US dollar. But it is a slow process, not a sudden one. More like a long wave than a sharp shock. If you found this breakdown helpful, you might enjoy our next video where we explore how global interest rates quietly shape everyday prices. If you want more simple explanations of big financial topics, consider subscribing. And if you are curious, watch the next video now.